Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 10th of May. Yen weakens as Tokyo fires another verbal shot. The yen tumbled against its major counterparts during the Asian morning Tuesday after Japanese Finance Minister Aso reiterated that Tokyo is ready to intervene in the currency market if the yen's moves are volatile enough to affect the economy. This was the second time in 2 days Aso made that statement, causing traders to take note as these comments were more direct than previous warnings of intervention. Nevertheless, with the next G7 meeting in Japan just around the corner, we expect that any such threats will be a renewed dose of all talk but no action, at least until that gathering. As a result, further verbal intervention is unlikely to have any major impact on the currency. We believe that the yen is likely to remain sensitive to changes in the global risk sentiment and any movements in the equity markets at least until speculation for fresh easing by the Bank of Japan resurfaces. Indeed, following the soft US employment report for April that diminished the possibility for the Fed to act in June, stock indices edged north on speculation that interest rates will remain at current levels for a bit longer, while the yen slid. If we were to see incoming US data improving, this could bring forth expectations for the next Fed hike and perhaps cause equity markets to retreat. As a consequence, the yen could resume this year's uptrend. As for today, during the European day, we get Norway's CPI data for April. Both the headline and the core rates are expected to have held steady at 3.3% year over year. Both rates are expected to remain well above the Norges Bank target of 2.5%, which increases the likelihood for the bank to stand pat when it gathers on Thursday, especially given that officials cut rates at the previous meeting. This could support the krone somewhat. In the UK, the trade balance for March is forecast to show that the country's deficit narrowed from previously. From the US, the job opening and labor turnover survey report for March is due to be released, and the forecast is for a slight decline in the number of job openings. This survey will also report the quit rate, which measures workers who voluntarily resign and is a closely watched indicator of how strong the job market is. The NFIB Business Optimism Index for April is coming out as well, but no forecast is available. Even though this indicator is not a major market mover, it is worth watching because of the Fed's emphasis on employment, especially following the soft employment report for April. The wholesale inventories for March are also due to be released. No speakers are scheduled for today. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.